Hello and welcome to our session on the fundamentals of financial management today. You've likely heard that accounting is the language of the business, right? Just as we use words to communicate ideas, business use numbers and reports to communicate their health to the world. Whether you are an entrepreneur, a manager, or an investor, you must speak this language to understand if a company is truly thriving or just surviving. So in today's video, we will break down into the two main pillars of this system, bookkeeping and accounting. Okay, so let's start with the clear definitions of bookkeeping and accounting. So starting with bookkeeping. Bookkeeping is the recording phase. It is a routine administrative task where every single dollar that moves, whether it's a for a client or $1 million sale, it's logged into the system. Now, accounting, however, is much broader. It starts where bookkeeping ends. It is not just about listing transactions, it's about analyzing that data to tell the story. Let's take an example. As Imagine if an accountant asks, we spent $5,000 on marketing this month. Did it actually lead to more sales? Then bookkeeping will provide the raw data and accounting provides the insight that did it really happen or not. Okay, so moving on, we have some more points to differentiate the bookkeeping from accounting more clearly. So think of bookkeeping as the daily diary of a business. It's historical. It tells you what already has happened. Accounting is the strategy map. While the bookkeeper ensures that records are 100% accurate, the accountant uses those records to handle tax planning, budgeting, and forecasting for the future. So, the main point here is that you cannot have good accounting without good bookkeeping. If the input is wrong, the output for the financial advice will be dangerously incorrect. Hope you guys can differentiate the bookkeeping from accounting now. Now we have the golden rules and the double entry system. So the entire world of finance, it relies on one simple equation, which is assets equals liabilities plus equity. This means everything a business owns, asset, was paid by either borrowing money, liabilities, or by the owner's own money, which is equity. To keep this equation balanced, we use the double entry system. Imagine that a business buys a computer with cash, then one asset goes up, which is equipment, and another asset, that is cash, goes down. This scale stays balanced. This give and take is the heart of accurate record keeping. So from all these points, we can now understand that why the accurate record keeping matters the most for the business. Now we are moving towards the end of this video, this lecture. So now we have the accounting cycle. All the accountants, they follow a circular process called the accounting cycle, which starts with analyzing the transaction, then generalizing, then posting it to the ledgers, then preparing, then adjusting trial balance, which is usually at the end of the year, and then generating financial statements. So it begins the moment a sale is made and ends when we close our books. A critical step here is at the trial balance, where we double check our entries that our total debits equals our total credits. If they don't, we know there is an error that must be fixed before we can publish our final report. We have three big financial statements or financial reports, we can say. These are the income statement, which tells you if you made a profit or loss over the year. The balance sheet is like a financial snapshot. It shows exactly what you own and owe on the specific day. And the last one, cash flow statement, that tracks actual cold hard cash. So this was all about accounting and bookkeeping. So as we bring this lecture to a close, let's recap the journey we have taken through the world of finance. We started by defining bookkeeping as the essential day-to-day work of capturing every financial transaction with precision and accuracy. It is the solid foundation which everything else is built. We then looked at the accounting, which takes those raw numbers and translate them into the meaningful insights. Accounting tells the story of where the business has been and, more importantly, where it is going. Remember, bookkeeping keeps you organized and accounting keeps you profitable. In conclusion, whether you are managing a small startup or a massive corporation, the principles remain the same. Stick to the golden rules and respect the accounting equation and follow the accounting cycle. When your records are accurate and your analysis is deep, you gain the clarity needed to make the confident business decisions. Thank you for joining me today. I hope this session has given you a clearer definition, understanding of how these two pillars support the language of a business. Keep practicing these concepts and you'll find out that numbers will start speaking to you. Okay, so bye.